What's going on, everybody, and welcome back to my first video in quite a while. I was very sick last week, so if I sound a little under the weather, well, I am a bit, but I honestly cannot wait to make this video because the world is changing very fast, and as we said over the last couple of months, this channel is going to be changing a lot with it, and today is going to be on the topic of AI pretty much eating everything in the economy right now that looks like software. AI is destroying the economy as we know it. That is the sentiment, and that is the reality if you look at the stock market. And we can show you literal proof that AI is creating hundreds of billions of dollars in losses on a regular basis from the stock market. And it is not just, vague intuition. It is not a potential future consequence. This is really what's happening. Now, is it happening because there's been tremendous job loss, or is it happening because people are worried about job loss? That is the question that we're going to be talking a little bit about. But right now, I want to make the case for you, and I'm going to be putting out a full recorded video on this tomorrow, that AI is a huge reason why Bitcoin is struggling. And it's not just because the marginal dollars are being invested in more exciting AI companies, but it's because AI is destroying anything that is software related. And when it comes down to it, we have seen that Bitcoin trades much more in lockstep with software than with gold, than with the NASDAQ, than with anything else. It is pretty much software as it's considered by the big boys. So when we look at the future of investing, when we look at the current climate, we have to ask ourselves, is this bear euphoria, or is this a change in the world that we're experiencing? And right now, does it make any difference? Because the charts are screaming very obviously one thing, which is that AI is here to change the world, and it is devouring everything in its path. Check it out. There is a lot. I said 250K. Yeah, I did. I said a lot of things in the bull market. We are no longer in a bull trend. Thank you. I hope I'm feeling better soon too. AI is not the problem. I'm misleading people. Okay. All right. Well, if you think AI is not the problem and it's just me misleading people, then you enjoy your thesis on reality, because today we're going to be showing you the facts. Check this out. Bitcoin has been in free fall, obviously, since the markets opened on Sunday evening. Sunday evening is the beginning of CME opening for futures the next day. And we saw this huge gap down, and Bitcoin lost this sort of semi-meaningful, not really meaningful level of 65K. It's not a huge level here. It's a mid level. But really what's happening is this. We have a combination of an article written by someone named Citrini. Now Citrini is, let me go ahead and make this just a little bit smaller here. Citrini is an analyst on Twitter and put out this like fictional, or I don't know how to call it, like anything other than a fan fiction post. It was a hypothetical post that Citrini put out here. Let me just make this a little small. There we go. Okay. So Citrini put out a post that effectively argued that in 2028, we're going to see this massive dump. I'm just going to show you the original article here. Okay. This is the Citrini research article. Okay. He says 2028, the global intelligence crisis. And he says what follows is a scenario, not a prediction. So this is not something he's saying is happening now, but Citrini is just a very high signal account followed by a lot of other high signal accounts. This is, we'll cover Punch in a second here, but essentially this is just the way Twitter works, is there's a few really sharp people that will sometimes put out some information that has a ripple effect on the rest of the investing world, because Twitter really is the source of where information starts and spreads. Okay, so there's a Citrini AI doomer fiction post that comes out. We have word that DeepSeek is distilling some information from Anthropic, and this comes from Anthropic itself. We'll talk about that. We have tariffs being set back, as well as potential strikes in Iran, as well as now some conflict down in Mexico, as well as potential conflict in Taiwan. And this poster says Happy Monday. And effectively what we're seeing is that all markets right now, all markets are just feeling absolute shockwaves. And I know a lot of people, especially even just here at the beginning of this episode in the chat, were saying that they don't believe that this is fully related to AI. Well, watch this. We see here that just a few moments ago, let me see if I can find this here. Where is the TradFi post? Yes, this. Okay, so Anthropic put out a post just yesterday or this morning where they said that Claude Code can automate COBOL, which is, I didn't know what that was, but apparently it is I saw a tweet actually breaking this down. I lost it. But essentially, it's an old system. That's what the IRS and other, legacy government systems are based off of, which apparently IBM owns that market. Well, instantly what we saw is IBM crash minus almost 10% or over 10%. So you're seeing these happen in real time, where effectively AI is directly impacting the economy. Yesterday, it was that Claude Code was can intermediate cybersecurity or programmatically attack cybersecurity, and you have cybersecurity companies dumping. Over the last few months, it was the SaaS apocalypse, right? Anything that was software as a service. And so if you say that AI isn't affecting the economy today, I would argue that that's not accurate. In fact, what we've seen is that this article, of course, this is all based on this step function in AI productivity. If you guys have been following the actual new models, specifically Claude Opus 4.6, came out 2 weeks after GPT 5.2, and you see an exponential trend here. Or as QW says here, we have a exponential on a log chart, which is a double exponential. And that's the pace of increase on AI's actual productivity. So this is what's happening is AI is actually destroying things in the economy, not creating all this excitement, because we're at the phase now where it's getting so good that it's threatening knowledge work. And that is the core issue here, is that knowledge workers are a huge part of the economy. And if they get put out of work, the actual spending within the larger economy will suffer. So there was this piece here by Citrini where effectively, I'm going to walk you through the thesis here, is he says effectively what's happening is that we have, he's just having a fan fiction here. He's saying the year is 2028. And he makes the case that at first, what will happen here is SaaS companies, software companies will fire a lot of people and start automating everything with AI. They will then pump because the markets will say, oh, these companies are actually still making a significant amount of money and they actually have compressed their margins. So effectively, they don't have to spend as much money on staff. So now they're actually much more profitable. But eventually, the things that they're automating, the doctors, the lawyers, the knowledge workers, which are the highest paid people in society, end up being out of work. And that has huge rippling effects because all of a sudden, tons of loans that were written for companies that were doing recurring revenue, those loans all of a sudden start becoming bad. Mortgages that were written to high quality borrowers that were working at high quality jobs as lawyers, doctors, accountants, knowledge workers, those start to default, right? So this is the thesis, right? Again, this is not reality that we're living in. This is the idea of what could happen over the next few years. Now, of course, I want to underline it's never as bad as it looks. And this is most likely going to be very, very wrong in many, many ways. But what's happening right now is this one article sparked this collapse. Oh, this is the explanation of the COBOL language by ICO Beast here. He essentially says COBOL is what a giant portion of legacy federal systems are based off of, including IRS, DOD, etc. Anyway, there was a nice, I got my tabs mixed up here, but I wanted to show the actual impact here. Okay, so credit card stocks now, because of this piece, just absolutely dumped. And you can see here, Visa, MasterCard, American Express, Capital One, instantly dumped because of a fictional theory within this Citrini piece, right? So you have this Citrini piece puts out this idea that, okay, maybe this would be bad for these companies because he theorizes that once the world becomes agentically driven, these agents will actually transact on stablecoins. They won't use MasterCard or Visa, and so their revenues will compress. So it's very interesting, right? You also have DoorDash and these other things dumping because the idea is that people will spend less money if they're not getting paid as much as knowledge workers. The people who were getting the free lunch at Meta for being knowledge workers, those people in the marketing department, the lawyers, the accountants, all of the knowledge workers were the ones spending frivolously, keeping the economy afloat, Uber Eating all their meals, and effectively keeping the velocity of money high, right? It's that top portion of earners that are being affected most by all of this. And so when people extrapolate out and say all this stuff is going to get automated away, that is precisely what is so scary about this moment, okay? So that's what's happening right now, is that AI doomerism is maybe reaching a fever pitch. There's an argument that right now we're seeing the peak of top of AI doomerism, and that we will see things normalize because the world simply never moves as fast as we hope or imagine it might. I think one of the best charts that I've seen is this one, and it really underscores just how absolutely far ahead we are as people living sort of terminally online. Miles tweeted this. He said 84% of the planet has never used AI. If you're on crypto Twitter, or if you're on Twitter in general, or investing Twitter, we should just rename it to investing Twitter, because we're not exclusively looking at crypto anymore. The crypto world is being so deeply affected by everything else that you have to be focused on those other things. And quite frankly, there's just not enough to be interested in crypto as 100% of the activities anymore. It's just a reality. So 84% of the world has never used AI. Only 0.3% have a paid subscription, and only 0.04% have ever vibe coded. You are early, act like it. This is very much so one of those charts that level sets, because if you're online, it might seem like everyone and their grandma is using OpenClaw, is automating every workflow, is becoming superhuman cyborg, and is somehow managed to change their investment portfolios to predict the next 7 steps of AI doomerism wiping out the world. That is not the case. The real case, the reality is that we are in this tiny, tiny fraction of people who are at the source of information, who are watching things almost in real time as they're happening, and almost in a predictive lens. A lot of times I seem to think that we're living in the future, at least a few months, and sometimes even a few years, being in this terminally online world of investing, because the whole point of investing is to predict the future, not to understand the present. And so to be a good investor is to be predictive. And looking at this chart, it's very clear that we are in the tiny, tiny minority of people using AI, wrestling with the true implications of AI at scale, and understanding how it's going to impact everyone. So as much as it feels like there's this fever pitch of doomerism, it's still very early in this world. And vibe coding and AI has not swept and changed the world yet. Now, could it over the next few years? Yes. And these types of step functions like we're seeing, like you're seeing Balaji highlight here, this is absolutely non-negligible. This is a massive, massive step change, like what we've seen over the last few weeks and months. But it is not in and of itself the signal that everything is different. But what we are witnessing might be that inflection point. But it is interesting that one article here, you have this one, literally, it says a fictional, it says at the top, like, this is a scenario, this is fiction. And you see that it's actually wiping out significant chunks of value from the stock market. We are in a very unusual time, And so it's important to realize that crisis, which is what it feels like we're in this crisis of AI doomerism. It will bring up massive opportunities, but it's also important to realize that those opportunities might not be today. And it's important to remain a little bit patient. We're going to be talking about the charts and the obvious things happening in those charts in just a second. But yeah, exactly. People can't afford bread. How are they supposed to pay for an AI subscription? I agree. I'm not saying the solution is for them to pay for AI. I'm just saying that most people haven't even used the free tooling, 84% of people. So to say they can't pay for bread is the reason, that's not it. There's just not even curiosity by the vast majority of people. And then even for the people who have used AI, they haven't even subscribed to the premium version, which is $9 a month or whatever. I don't think that $9 a month is the reason why people haven't subscribed to AI. I think it's that we live in a very, very small minority of people who are focused on the deepest level of tech advancement and how it's going to affect investments or infect investments, as I accidentally just said. Let's get to this. Once again, here is Bitcoin overlaid on the expanded tech software ETF by iShares. Obviously, the percentages are different here. Bitcoin went up way more in percentage since 2018, right? But directionally, they are mostly in a bull run or a bear market almost to the day, right? You can see that the expanded tech software ETF bottomed almost exactly on the day that Bitcoin bottomed in November of 2022. And it was up for almost exactly the same amount of time with almost identical peaks throughout, right? So you could say, oh, wow, these are just not the same chart, but they look really similar, right? They look very, very similar when you compare software as a whole to how Bitcoin has traded, especially in this recent run up. But also look, in 2022, or in 2021 rather, they traded pretty similarly as well, with this March peak or a May peak, and then you had a late 2021 peak as well. It's not that different, right? It's not that different. Narratives were different, but the actual trading velocity, momentum, and then eventual drawdowns were not insanely different, right? So it is something to consider. It's something to consider, okay? That these things are very, very similarly treated by the larger investment capital out in the world, and that speaks to the way that institutions view Bitcoin. And so when we look at, hey, there's an article that wipes out For example, this was not just the only example of this. We have here 2 days ago that Claude put out a tweet saying they are introducing Claude Code security. And look at the reaction. CrowdStrike down, Cloudflare down, Palo Alto Networks down, Zscaler down. So you can see here there's a knee-jerk reaction happening by institutional capital when these things are put out in the world, that there's a new innovation from Claude. So the world is running scared from software. It's running scared from the thing that has powered the recent run-up in the S&P and the NASDAQ that has been one of the most magnificent runs in the history of the American economy. And we are also at a stage where I should say, and I think this is very important for us to acknowledge here, we're at a stage where you have this, the largest amount of retail capital inflows in history in the stock market, okay? Retail investors bought a record $48 billion in US equities in the 21-day period ending last week. Let me read that again. Retail investors bought $48 billion in stocks in 21 days. Okay, this exceeds the previous record set during the April 2025 crash by $5 billion. And by comparison, they bought $33 billion at the beginning of 2022 before the bear market hit. Subsequently, they sold nearly $10 billion near the end of the 2022 bear market. Never in history have mom and pop investors rushed to buy just to buy so intensely. How does this end? So what you see here is a stock market that the bigger investors are risking off from, that you have true, genuine fears of AI wiping things out. And meanwhile, retail, mom and pop, and likely the types of investors that are going to be most heavily affected by the knowledge worker recession, if you will, if there is one, if we end up losing a lot of knowledge workers, which I think is at the very baseline reasonable, that there will be less knowledge workers because of AI automation. I mean, most businesses can now start replacing at least low-level knowledge workers. Say you have a marketing intern or someone running social media, making social media posts. Well, guess what? You can definitely automate some of those images, some of that media creation with AI, at least right now. You don't have to go all crazy and say you're going to replace your doctor, but at least some level of knowledge workers are being replaced. And meanwhile, you have the retail investors, which are generally considered generally considered, sick brain right now, but generally considered less sophisticated at the highest levels of investment into the stock market. So I think that you have a recipe for some kind of sell-off happening here. And it's just that we as smart investors need to figure out how to be on the right side of this. Now, I want to be clear. I think that AI doomerism is in some ways brain rot. Like, I think that there is a real genuine brain rot that's happening, because on the other side of this, if it's true that AI and robotics are going to make knowledge work and physical work totally almost free, or the marginal cost goes to zero, well, then you could probably build a house for very, very cheaply, and you'll probably be able to feed your family extremely cheaply. So the basics of life, healthcare, housing, education, those might go down and trend down to being almost $0, right? Or very, very, very cheap. So how to live a high quality life, or a life that has its basic necessities so that you can raise your family, that might actually become extraordinarily cheap. And you might not need to spend your whole life working like a dog to just have the basics of, a modern life. That is eventually what I think this is going towards. But at the beginning, what's going to happen is we have an economy that's not wired that way, that will have a lot of freakouts. And I think what we're seeing is just the emotional reaction to tech advancing this fast. So it's important that you realize, whether you agree with this or not as to why it's happening, it's just acknowledge it's happening. Claude puts out a tweet and the whole market of one sector dumps. These aren't coincidences. These are just very, very connected facts. And so AI right now is, as much as it has been exciting watching it run up, it is now actually having a net negative effect on significant sectors of the economy. You might say that that's a good thing. Who knows? I saw this one tweet. I thought it was pretty bang on, but essentially, Tenobras says all of these are effed, giga effed, Grammarly, Calendly, Miro, Rentool, like all of these like basic automation workflow tools. And then he says just normal effed. You have Accenture, Intuit, the enterprise softwares that are probably still going to be harder to vibe code. And his whole assumptions are coding agents keep getting better, software keeps getting cheaper, personal agents will work and proliferate, everyone has access to equivalent of compute, full-time PA, and labs increasingly enter the application layer, meaning that the actual frontier LLMs like Claude, like OpenAI, like Gemini are going to start making the applications themselves because they don't need people to have an application layer on top. I think this is true. I think that the base of the AI doesn't need to be fed through an application to make it useful if the AI is just better. So this is where I do think that the assumptions are pretty right, is that people building applications on top of AI, I think it's very, very tenuous because eventually people will either be able to build their own applications or the AI won't need an application. You can just talk to it and just say, hey, can you do my taxes? And it'll just say, cool, yeah, give me this information. You give it and then it does it, right? You don't need a whole interface just for that. So I think people will make some money in the short term, but I don't think that it's sustainable personally. And then I guess the more scary part is, what if this is, what Mano brought here? I think this is, again, doomerism. I don't buy into it. But what if this is in the process of topping forever? Retail jamming every last cent into the US equity market at the peak valuations right before they start losing their jobs to AI and the employment rate structurally bottoms. Maybe. I don't know. I think that what we'll see now is that we're seeing the bear trend. Either it's reaching its euphoria because it feels very strong, or it will have another few legs. And we just need to understand and have a humility about understanding that this is a new thing and that these new trends can be very powerful because you have a lot of people around the world buying into this, not based on vague hypeum, but based on real results, real outputs. And so whether this is the middle of the bear market or whether we're at the bottom, we will find out. And I don't think that you need to be a hero. I think that it's quite likely that we could be at the bottom. I mean, Bitcoin dumped, but not that much, right? It's still in this range. You could see this as maybe even, is this a failed breakdown? It's not a serious breakdown from 65K. But then when you zoom out, it's just limp. It's just flaccid. It doesn't seem like it wants to pump yet. But that could change. That could easily change. We'll talk about that because I don't think that we're seeing quite what we want to see right now with stuff like this coming out. One of the oldest Satoshi era wallets just sold 1.24 billion, holding since 2009. This is the stuff that bothers me, right? Because you have wallets that survived many cycles now deciding now's the time they want to get out. So it does feel, as much as we want to scream bottoms in, it does feel like just having a patient mindset and just saying, okay, why don't we just say the bottom's in when we at least start seeing a reversal of the charts? Just, there's no reason to be heroic about this, because if it's true that AI will have this like massively destructive effect to software, well, we might not be at the end of that. It might just be, stocks are at pretty much all-time highs. So I don't think there's any reason to rush into a thesis because eventually I do think that you will see the need to print money again. You will see that the cries for UBI or redistribution of capital from AI will become, they'll reach a fever pitch. You'll see that the need for a renegotiation of how things work will happen. And you'll see that things like Social Security, which are running out of money, things like that will need to get funded. And usually the only way they know how to do that is with the money printer. So I don't think there's any reason to rush into massive positions right now. I think we should just keep analyzing and monitoring the situation and remembering. Just remember, like, most people aren't doing this. You are in the tiny, tiny fraction of people. You are in the red dot, right? You are in this red dot. If you are in crypto and you are focused on this right now, you are in the 0.04% of the population. And I highly encourage everyone to be vibe coding and stuff. I don't think it's going to change your life. I don't think vibe coding is something that is going to give you this massive leg up on the rest of society, because I do think that it will all be right in your phone. That's what Siri will be within the next, year or two. But I do think that understanding where the world is going, using the tools, and not just focusing on second and third hand sources, what other people think, but drawing your own conclusions will help you navigate the storm. And that's where I think that most of us should approach all this with a curiosity. And even though it feels like the bear doomerism is reaching this fever pitch, don't give in to the raw emotion, because the raw emotion won't let you think clearly. And I do believe that the people who think clearly over the next year or two will end up holding on to assets that will dominate, not just for the next few years, but probably for decades to come. So it's going to be an exciting time. And I do think this is one of my core theses, which is this is Palmer Luckey. He is the head of Anduril. Anduril is one of these very exciting new AI, military defense tech companies. And I will show you what he has to say. And this is essentially my what I was trying to say on the last few episodes.
The biggest beneficiaries of vibe coding are going to be the hardware nerds like me. It's going to be the shape rotators, not the word cells.
So this is an interesting take, and I think this is totally true, which is that the future is going to be much more beneficial for those who are doing physical things. And I think that the intersection of AI with crypto is where the most exciting stuff happens. But then where you look at the actual beneficiaries of AI, I think that you'll see that a lot of these overseas cheaper models, let me see if I find this, because this actually came up today. But a lot of these AI models, even Anthropic, right, are being threatened by being attacked through, where is this article? I have way too many tabs open. Okay. Check this out. So if you're Anthropic, imagine you are Anthropic right now. You've built the best AI in the world. Well, guess what? We just found out that they're responding to the fact that they've been getting farmed, right? They've been getting farmed by open source AIs from Chinese labs, right? Across tens of thousands of counts used for something called distillation. Distillation is where they have their AIs interact with Claude and reverse engineer how Claude works, how Claude thinks, to essentially steal Claude's, value and train it so that their AIs are now getting better, getting to be just as good as Claude, right? And so it was widely speculated this was happening, but the scale is staggering. Honestly, amazed that it took Anthropic this long to clamp down on this. Explains why they are locking down API usage, right? So this is the defensive moats of AI are unfortunately very blurry, right? Because you have these premier frontier models like Anthropic, like OpenAI, like Gemini, and then you have the open source Chinese competitive models like Kimi, Minimax, GLM. And what's happening is the gap seems to not be significant because every time there's a leap forward in Opus, there is a similar leap forward by QN or one of the open source models. And so I guess it's really hard for me to see even investing at these insanely high valuations, $500 billion for Anthropic, almost $1 trillion for OpenAI, several $1 trillion for NVIDIA. These are these massive, massive valuations, and maybe they'll be defensible, but it's possible that intelligence becomes widely distributed and as common as oxygen and water, and that maybe it's the physical things that are used in the byproduct of those intelligence that are much harder to compete with, like robotics, like the shape rotators. And that's kind of my base theory for how to approach the next era, which is what can't be easily cloned. And this is an era where I think that if you understand the thing after the thing, as I've heard a lot of investors say, they're like, oh, the thing right now is AI, but the thing after the thing is robotics, is embodied AI, is the shape rotators, the physical world. And it goes in tandem with Peter Thiel's theory that we have had decades of focusing on the world of bits, the digital world. And now we're going to sort of rotate back to the world of atoms and have the value created in the digital world start to feed the value of the physical world, because the public transportation around you hasn't improved at the rate that your smartphone has. So it's just an interesting time in history. I actually, as much as it's freaky and there's doomerism, there's all this stuff to worry about, there is all this stuff to be excited about. And we are going to live absolutely insane, radical lives over the next 20 years. And especially if you're able to nail a few of these pivots in the market and understand what's about to grow dramatically in value. Okay. In Bitcoin specific land, we're going to be looking at this chart, which hasn't changed, right? We had this one pop up several days ago. Remember, we've been saying essentially 72K is the big line. It's the big line in the sand. We had, let me actually go ahead and move this up to exactly 72K. We had this very, very anemic bounce over it right here. Unfortunately, didn't really get us to where we wanted to go. I'm going to change this to be blue. And ever since then, it's just been flaccid. It's been more flaccid than old grandpa over there, old grandpa without his pills. And that's currently just the state of affairs with Bitcoin. And that's why maybe Bitcoin hits a bottom here and hits an inflection. Maybe it just chops around a bit more. I don't think we need to be freaking out about it. Don't need to be forcing it, because as I told you, we have other charts like this, like gold, which I told you I was going to be reallocating towards if we broke 5,100. We did, and look at it, up nicely over 5,100. Again, we will see how this goes. The all-time high here was 5,600. But as we see headlines like what we're seeing with Iran, like what we're seeing with Mexico, it's very, very clear that gold is going to be more and more desirable, especially as people flock to safety. Remember, people want in times of uncertainty, the safest thing. There's nothing safer. There's nothing more dependable than gold. And gold will be a thing that very clearly will benefit from all of these sort of secular trends of fear of tech, fear of the stocks crashing, fear of knowledge workers getting laid off, not knowing what's going on. Gold benefits from all of those things. And so I don't know where gold ends up, but I know that it's genuinely bullish what we're seeing, and then seeing it reclaim this $5,100 level. That is objectively very bullish from a chart perspective. So you had this sort of, this was the bottom here. That was from the flash crash sell-off, the top before the exponential breakout, and then we couldn't get above it, and then now we've broken it. These are all just very, very bullish basic technicals mixed with the narrative, and you get a recipe for gold, which will probably pull other commodities up with it. As you know, I've been very bullish on copper and uranium. Uranium not having a particularly bullish day today, but copper has been holding pretty nicely here, just kind of going sideways over the last few weeks or so. Let's get this onto a slightly longer chart. Yeah, copper's just been kind of bouncing sideways. Nothing major going on here. But again, copper's going to be one of the main bottlenecks, right? Where regardless of whether it's QWen or DeepSeek or OpenAI, it doesn't matter who wins the intelligence race. All of these models need data centers, they need processing, and those need energy. And so if you're betting on the bottlenecks, the data processing centers, the compute, the actual energy, those are interesting places that I think, once again, they're physical things. They can't be vibe coded, and they're needed for this next era, regardless of who wins. Those are interesting places to be doing business. And I just think it's okay to have some cash right now. Like, you do not have to have a position. If there is not a strong, very obvious thing to bet on, you don't have to have a position, and that is okay. That is okay. And that is something that I actually have been very, very, very positive on since we went up to the housekeeping zone, of just having some cash, because if things do get really ugly, then your cash is going to go really, really far. So that was the goal of the housekeeping zone. And right now, to be clear, even though gold is bullish, it's not like insane. It's not at all-time highs. There's nothing that is insane and like so exciting you need to stick all your money into it right now. So having some cash is absolutely a good plan. Oh, this chart was pretty insane. The emerging markets ETF. Look at this. 20-year high of $55 got rejected back in February of 21. Made its way up, and it's been durably above it now. So this is a full-scale blue sky breakout on the EEM, the iShares MSCI Emerging Markets, Emerging Index Fund. This type of stuff is interesting, and I think this is just more about capital looking to rotate away from the S&P, looking to rotate away from maybe some bloated tech names, and it has maybe something to do with tariffs, but overall, you've just seen emerging markets do very well on the context of uncertainty, capital just coming home to different markets. Maybe that's just the simple way to understand it. All right, now for crypto land, because let's be honest, it has been rough in crypto land. And today was unfortunately another blow, because what we see is that the almost 75%, like over 70% likelihood of the Clarity Act getting signed into law just got dealt a blow, trading as low as 36% today. That is not what we want to see. And it shows that the gridlock that we're seeing around crypto, which has been made worse by the collapse of prices. Well, it might be the part of the sandwich here that gets this law pushed back. And again, the Clarity Act is needed to protect this industry. It is needed to protect developers in this industry, or once the administration switches back to a hostile regime, which it feels like if there was a swing back to the Democrats in the next election, it would be. This is not good, right? So this is definitely playing into the uncertainty and the bearish pressure on the market. And then you have this, right? You have, here's this clip. I want to just play it. You guys have probably seen this kid Clavicular. He's the biggest, he's like a 17 or 19-year-old kid, and he is the Looksmaxer kid, and he's out there. Here's what he has to say about Bitcoin. So this is just important that we understand where things sit in the public's eye.
I bet half the people are on suicide watch. Remember, go back literally a month ago when me and Sneeko were collabing, sitting at the restaurant talking about Bitcoin, and I'm like, Bitcoin is dog shit. Bitcoin, don't trust this fucking garbage. It's a horrible investment. And everyone in the chat's like, bro knows nothing. Bro's a retard. Like, don't listen to this kid. He's got no idea. Like, vindicated, Jesus. Like, you guys are a bunch of fucking clown retards for buying into this shit. Okay.
Anyway, this is, I don't agree with what he said, obviously, but it just shows you that Bitcoin could not have a worse reputation publicly than it has right now. And Bitcoin is the best of the cryptoverse. It's the best performing crypto asset in history. And it's the one that isn't really threatened by AI the same way these other crypto assets are. I think Bitcoin makes a lot of sense in an era of AI. However, seeing Satoshi era wallets run for the exits is concerning. It's concerning. You see behaviors that you haven't seen in other bear markets. It is concerning, and we just need to recognize that the public opinion is not on crypto's side. I think as crypto investors, we need to see ourselves as macro investors, because that is truly the basis of crypto, is that money printing, debasement, understanding the Federal Reserve, understanding the forces of inflation and the forces of that surround fiat currency is why Bitcoin was invented, and understanding how things may change throughout the world of AI, the era of AI, is utterly critical to continually investing. This was a good take, I think. You have Tyler Durden here saying he'd like to buy some coins, some crypto, when this cracks 16%. Effectively, this is the stablecoin index, showing that it's only right now at about 11%. This is USDT plus USDC and their dominance. And you can see here that the all-time high was about a little over 16, maybe 17%. So he's saying that the bottoming zone, if we look at the last bear market, would be a little bit higher here. I think that these are good macro charts to look at, although I will say with the push to legalize stablecoins and for so many new stablecoins to have come online over the last few years, it very well might be that at least this particular metric, we might see an all-time high on it, because there's just more of a proliferation of this particular part of crypto than we had seen even in 2022. And so there's possibilities that this metric will go higher. I just want to say that it doesn't have to top where it topped last time, because there's been a secular push towards more stablecoins, something to consider as we look at this metric. But I do think it's a good way to effectively analyze where the bottom might be. In other news, we have mortgages hitting the lowest rate that they've been in many years here, 6%. And we also have home sellers now outnumbering buyers at more than 600,000, the largest gap ever recorded. This, to me, is the beginning of what we will see with a housing downturn, right? We should see a housing downturn here in the next year or so. It hasn't happened yet, but I think that it will actually be one of the biggest net positives for most people in the world, right? I think that we will see the panic over valuations, but we will also see that with AI and robotics, the actual amount of cost, of hard costs to build a house may trend down to being very, very low. Over the next 10 years, maybe in 10 or plus years, I have no idea how quickly this is gonna happen, the ability to like 3D print and robotically assemble a house will probably get to the point where it's very, very cheap. And in that world, I think affording an amazing house for your family may become widely accessible. And in my opinion, that would be one of the biggest steps forward for humanity, so that everyone can be included, can raise a family safely, not have to worry about that. That would be an absolute gift to humanity. So I personally hope that we see a massive housing correction. I know that there would be strain on the banks and all those things would have their other consequences, but let's be honest, boomers sitting in houses that they bought for 100K and now trying to flip them for multi-millions, and they own multiple properties, vacation houses, they're sitting on wealth that has pretty much been based off of buying properties decades ago and doing nothing. I think that that is a net negative for society as a whole. I don't think it's added to the nation's value, to the nation's quality of life. And I think that if we see this correct for at least millennials and Zoomers, it would be an amazing gift, because life has really been on legendary hard mode for this generation with the cost of housing. That is the biggest piece that has prevented, I think, a lot of people that I know from actually settling down and starting families. It's just so hard to get a decent house. Hopefully that changes. Crypto is done. I think I wasted so much time on this vaporware. You know, the reality is that right now, it feels just like it felt in 2022 and in 2018. The difference is that we as an industry became very entitled to thinking that we were guaranteed this massive bull run, that we were guaranteed this massive upside, and that once we got the backing of the presidential administration, the flip from thinking that things were guaranteed to thinking that we're still this like underdog industry that's trying to take on these massive behemoths. I think that that flip of feeling entitled, which is something I'm totally guilty of as well, I think that that's why it right now feels so bad. But I lived through the 2018 bear markets. I lived through the 2019 moment, and it was a ghost town. It wasn't even, people weren't even angry. People were just not even here. And so I think that crypto has been through worse, and that it will find its way. The total addressable market, the TAM for crypto, is absolutely massive. And that right now we're seeing a changing of what we think crypto might be, to we're seeing the actual use cases evolve to what crypto will eventually be. And I can tell you that one of the most exciting parts about this is that this whole new world of AI, of agentic commerce, of agentic building, it's not the LLM, it's the agents that go out and do stuff on behalf of the LLMs. And they're not going to transact on Visa and MasterCard. They are not going to transact on legacy rails. They will transact on crypto rails. How that translates into us making money, we haven't seen it yet. And I think it's foolish to try to over-index on what's happening today. But I think there are some very obvious use cases for crypto that will start to become very clear in the coming days, and not in the coming days, but in the coming months. And I think that getting overly bearish is going to be what everyone runs to. But right now, you're right. I think that the space has become very difficult to allocate capital in. Almost everything's draining, and that will change eventually, but it's not today. And there's no reason to rush into it today. I think that the future is bright, but we don't need to rush into saying, oh, we're at the inflection point. But here's the list of narratives that I think make sense. Knowing everything we know today about crypto, there's still some really interesting narratives. One, agentic commerce using stablecoins on crypto rails. Agents go and transact like permissionlessly. They don't need intermediaries, and they don't need permission from these big centralized financial institutions. That's going to create a frictionless economy. Very interesting. So agentic commerce. The second, privacy. As we're seeing with all of the inequality and all of the turmoil around tech, around AI, there's going to be more and more cries for the government to come in and to control property, control markets, and to have a full visibility into the way that you have your own personal finances. So I think crypto-based privacy will become a genuine, useful thing for the world. And that is one of the areas that crypto can do in a way no other software can. You cannot create genuinely private transactions in the legacy system. Ooh, still a little bit sick. So privacy, agentic commerce, and I know you guys are going to skewer me alive for this, but I do think that there is the entertainment side of this, right? Where we're seeing in South Korea, live streamers, live trading crypto, live perps trading, and it's being treated as an esport. I do think that the hyper gambling that has infected the entire world, not just in crypto, but sports gambling. There's a whole generation that all they do is sports gamble. There's a whole generation that gamble in Roblox. Everything has become gambling. You look at ESPN, they're showing the sports game, and below it, this is my pick six. These are my odds. Every single thing is gambling. You flip on the UFC and they're saying, oh, you could make $1 million if you bet on the prediction markets. It is absolutely ridiculous the way gambling is being shoved down your throats at every single step of the way in modern culture. And I think that it's a natural extension that crypto becomes the epicenter of where risk and gambling and essentially gaming and entertainment meet. And so I do think that that's part of not how I actually anticipated crypto gaming to evolve, but I do think gaming and gambling and crypto will kind of mishmash together into becoming a future form of entertainment. So those are the areas that I think make sense in the future. I'm not saying, hey, buy this, buy that, it's going to go up for sure. But I still think that there are some really compelling narratives that you can only do in crypto. Of course, DeFi, we all know that, decentralized finance. That's where the big financial institutions are coming for first. But those are the really interesting things. You have Bitcoin, you have DeFi, you have sort of entertainment / gaming and gambling, you have privacy, and you have agentic commerce. Those are really, really solid. And I think that those will stand the test of time, not just today, but those will be very interesting narratives on into the future, knowing everything we know now, and even factoring in the SaaS apocalypse, the AI wiping out all the software. I think that those narratives are still very interesting in that world. So I think that it's important to realize, hey, even when you factor everything in, there's still very interesting things happening in the world. Now, I did want to bring this up here. Supernova rewards are actually going live for super stakers. So if you're a super staker, some of the ownership of Supernova is being flowed through to super stakers. So once again, marrying the super project with one of its child projects, Supernova. Again, we know the market has been extremely rough. I know that it has been extremely rough. And I said this before we put out Supernova. We were expecting for the market to be very flat. But the point here is the project is up, it's live, and the team can now continually iterate throughout the bear market now that the thing is live, has done over $600 or $700 million in transactions in its first week. And so this is now a way for that value to flow through to super stakers. Again, check this out. Really cool announcement by Superverse. The point is, good times, bad times, you keep building, keep iterating, and you keep trying to deliver stuff to the audience. Ain't no two ways about it. You can't change the weather, but you can keep working. And that's what we're planning to do. As always, you know, I will say, having been through now, this is my third full bear market, I will say it is unfortunate, right? It's unfortunate where we are as an industry, and it does get very difficult at times to continually try to see the optimistic side of things. But that's how markets are. Markets do beat you down, and it's the people who act counterintuitively and with a long-term vision that eventually succeed. I'm not telling you to run out, spend a bunch of money on crypto. I've been net bearish structurally since we reached the housekeeping zone, or really since we broke down from 100K. And I will tell you, as soon as I flip bullish, obviously I've been focused more on shorting right now. It's not really content that I think makes sense for the channel, because the actual way that trades play out is too momentary. I can't make a YouTube video, publish it, you know, edit it, publish it, and have it be about some short entry or long entry. But overall, pretty simply, once we do flip bullish, I believe we'll catch it very, very early, and we will ride the next bullish wave. And I'm excited. I'm excited for the future, because most of the time what happens in markets like this is you wipe the tourists, you wipe out people who don't have a long-term vision, who don't actually have the guts and the grit to stick through these horrific conditions and be there for the next time. We did that through the last bear market, and Super was one of the only coins that actually performed from the lows in the gaming sector. And I'm proud of that. Even though the gaming sector was horrible, I still feel like we were able to give some life back to the project. So, you know, that's the reality, is that you just keep grinding and you keep your head down, knowing that at some point things do shift, because everything is a cycle. So try not to get too, you know, wrapped up in the bear euphoria, but also don't think of it as wrong to have a pragmatic lens. I think everyone should be trying to be as pragmatic as they can right now, because the next few years will be full of opportunities, and you want to be in a place where when you actually see that opportunity, you have a chance to pounce. Upload yourself into Ledger. I think there's something to be said about, you know, staked, what's it called? Staked content, where you're essentially validating that the content is yours. You have some kind of cryptographic signature. I have no idea how to invest around that right now, but it's an interesting idea that you have some kind of way to validate content, knowing that, hey, anyone can make a video of my face with my voice, and they can make it look very real now. So how do you prove that I'm me, and how do you prove that that's not me? Well, you need some kind of unhackable, unaccessible signature. So that's one way to do it. We can tell it's your third bear market, lol. Your forehead is growing every time. What does that even mean? What does that even mean? My forehead's growing? How does my forehead grow? How does a forehead grow in a bear market? What does that mean? Genuinely. What's up, Elliot? I've been watching you for a while. Wondering if you could share some of your experience starting a business. What was the biggest hurdle for you? Starting a business is very difficult. I have started many. I have failed a lot. I have started some that have been extremely successful. And in the end, the business will always rely on the founder to work extremely hard every single day. And there will oftentimes be no rewards for your work. And so starting a business, the hardest thing is working extremely hard when there's no reward for the work for long periods of time. Eventually you can get to a place where you have capital, where you have the ability to fund things and to prepare so that when you launch things, there's more of an effect. But for example, I worked on EllioTrades. I did videos on this channel for 3 years without making a single dollar. So there was a long period where people looked at me as absolutely insane for filming videos about cryptocurrency, like absolutely insane. And so you just have to be willing to endure those long periods, those troughs where it's only you congratulating yourself on working hard. And oftentimes all of the people that are closest to you will look at you with doubt, because secretly, and I can say this as someone who has made it by other people's yardsticks, by a lot of other people's yardsticks, they would say, oh, he's made it. I don't consider myself having made it because there's so much I want to do that I have not yet accomplished. But a lot of people will look at you at those early days, and the truth is that they don't want you to make it, because when you make it, it makes them feel lesser than. And as someone who has gotten ahead in various ways, more so than anyone I knew growing up, it doesn't change. Nobody comes around and goes, oh my God, I'm so happy for you. Like some people do, but oftentimes what you realize is that people they're not focused on you becoming a rock star success. So if that's what your goal is, to become a huge success, you have to be the one, pushing and motivating yourself, and know that you may not get the external validation ever. So you have to just be willing to grind and eat glass and eat shit until the stuff gets done. But that's the hardest part about starting a business, is just being the only one who believes in it and having no evidence, no external evidence that things will work, and never getting that feedback from the world. And that can go on for long, long periods of time. Tokyo has your back. I appreciate you, boys. I really do. Based on your housing idea, won't most people who have tremendous wealth in their houses go broke due to equity loss? I mean, there will be absolutely equity loss, but a lot of this is paper wealth. Now, people who have maybe tremendous, so the other part about this is interest rates will probably collapse if this happens. So the cost of borrowing money will go way down, because inflation will also collapse. We'll have deflation. So the difference there is that you won't have people owing as much money on the debt, and there will be able to be, refis. There will also be a wave of people who over-levered, and they'll be forced to sell. And that will be further pressure downwards on housing prices. So all of these things are maybe net bad for the super rich who are property rich, who rode that wave. But now you have demographic shifts. There's way less people in the world. There's way less of a consumer base for single family houses. There's way less people having children. And I think that the high cost of living has everything to do with that. So yes, we can bust out our violins and say, oh yeah, we're sad that the boomers and their property valuations have been getting absolutely frame-mogged. But the reality is that that's good for the world. I don't think having the boomers sitting on 5 houses and generational wealth because they bought a few houses in the 80s, how is that helping society? I don't think it helps society personally. I think that's just gatekeeping. So obviously in the process, if there's a bunch of loans that go bad that the banks can't get paid back on, then banks go under, people lose their life savings. That's the cycle that leads to the government printing money. And once that stuff happens, then you get the printer fired back up. And then you get things like Bitcoin start to gap up, right? You get things like gold start to gap up, right? So that's where you start to see the debasement trade come back. And I think that you understand that the displacement of knowledge workers is the same thing. The thing that we were just talking about earlier in this episode, the Citrini article, the displacement of those knowledge workers, that leads to more loans going bad. That leads to good quality loans not getting paid back, right? Which is a whole different sector of the economy that's normally not under risk. You have all of the high quality borrowers, the executives at tech companies, all of a sudden they're laid off and they're no longer going to pay back their mortgage. They're no longer going to pay back their car loans. Those types of things have massive knock-on effects for the economy. So am I saying like this is a good thing? No, I'm saying that there will be some violence. There will be some brutal violence here. But on the other side, maybe there is something much closer to a world in which you can just have a life. You don't need to be the number one kid genius to break free of the social situation you've been placed in. I saw a great article by my buddy Will Clemente here. He had an article here saying climbing a broken ladder, a message to my fellow Zoomers. I think he says he's 23. Essentially, this is an amazing article, but it's highlighting all of the things we know to be true here, which is that you cannot get ahead from college, right? You can't get ahead with a degree that costs more than it pays. You have the government backing of student loans. He argues this created wave and overinflation of college degrees. He also talks about the rise of AI and robotics. We know this. You can't get entry-level work anymore. And more importantly, he shows this graph, which has, where was it? It was America and its social mobility. effectively showing, where was it? Is it up here at the top? Maybe that was a different article. But effectively, this article is showing how we no longer have the same social contract. We don't have the same ability for Americans to pull themselves up by their bootstraps, to get ahead, to go get a degree, to go invest in themselves. And it has everything to do with the amount of wealth being hoarded at the top of the generations and in assets and the wealth distribution. So it's going to be an interesting time, like I said. But I do think that I feel for even the younger generations, Alpha and Zoomers, because it was hard on millennials too. I was very lucky. I was very fortunate to take huge risks getting into things like content creation and crypto. Most of the people who I grew up with thought I was crazy for not going to get a business degree, a law degree, when I had those opportunities. And now I look back and I am so thankful I listened to that voice inside and took the risk. But it shouldn't be the case that you have to take extreme risk and be a one of, thousands or millions to be able to get to a place where you are sufficient and having a good quality life. Even for me, the housing in tier 1 cities in America is insane. It's insane. So I don't own home. I don't own a home yet. I haven't invested in real estate yet. I think it's an absolute scam. I just think it's a dumb thing to do with your money. Personally, I don't like buying the top on things. Would I love a place for my little kiddos to run around in? Yeah, we'll figure that out. But for right now, I think that the housing market has detached from reality as far as the value it provides and what it costs. And I think that if that corrects, it'd be good. All right, guys, I got to wrap because I got to get to something else right now. But yeah, look, we have become macro investors on this channel. We have become all kinds of people of the world. And it's important that we become heavily understanding and heavily anticipatory of the changes from AI, from robotics, specifically AI right now. But in my opinion, the thing after the thing is robots, right? The embodied AI, the shape rotators. What are the physical things that are actually going to benefit from AI? Because I think the digital things are mostly going to suffer for a bit. So understanding bits to atoms, the physical things are going to benefit more than the software. Let's get ahead of these trends. And I believe that like staying in the arena and staying locked in the pain cave over the next few months, as much as it's like, oh my God, people are going to lose their minds because the markets are going to be so difficult. We're going to look back at 2026. We're going to look back at 2027 and say, those were the times to be making moves based on what's happening in the 2030s and the late 2020s. These are the times to keep your head on a swivel and understand that crisis breeds opportunity. And we are in the midst of AI reaching a bear euphoria crisis, and it's affecting everything. So I believe Bitcoin has been taken down largely by not only the marginal desire for AI investments for people's risk dollars, but also the world risking off from software in general, and Bitcoin trades with software. So these are important trends. I think we should all be tracking them together. I hope you guys enjoyed this episode. And if you're watching this on the replay, click on this video popping up right now, as I'm sure you'll love it as well. I'll see you on the next one.